we'll be going over IRS Form 8282, Donee Information Return. This is used by tax-exempt organizations to report the sale, exchange, or other disposition of donated property. So, tax-exempt organizations must file this form under certain circumstances for property that is valued at over $500. So generally what happens with non-cash contributions is that the original donor must report certain contributions over a dollar threshold on IRS Form 8283. And then this allows them to document the value of that particular contribution when they file Schedule A on their tax return. If their contribution exceeds $5,000, then the recipient, the original donee, must countersign Section B on IRS Form 8283. So the IRS uses Form 8282 to compare the market value of the tax deduction and the fair market value of the property as it's reported within 3 years of that original donation. So if you receive Form 8282, there's not really a filing requirement. You should probably keep it in your tax records. However, there is no additional filing requirement for you as the recipient. So we'll go through this information return from the point of view of the filer that must file it, so the tax-exempt organization, so that you can understand the information that's in this form if you ever receive it. So in addition to the identifying information field at the top of the form, there are 4 parts that we'll go through in order. So part 1 contains information on the original donor and, if applicable, a successor donee receiving the property. So we'll talk about the types of donees that the IRS refers to in this form because they can become confusing in just a moment. In Part 2, Part 2 contains information on previous donees. So the original donee, if you're not the original, and then the preceding donee, if that's a different organization. Part 3 contains information on the donated property itself. And then Part 4 is a certification that you may have to complete on behalf of the tax-exempt organization under certain circumstances, and we'll get to those momentarily. So, at the top of the form, we spend a decent amount of time discussing the different types of donees. In the IRS instructions, the original donee is defined as the first donee to which the donor gave the property. So if the donor filed IRS Form 8283, this would be the donee that countersigned for any contributions over $5,000 as required in Section B. Any other donee that is not the original donee is considered a successor donee. However, the original donee information is down here. The preceding donee that they refer to, if the preceding donee was not the original donee, would be the donee that you as the tax-exempt organization received that property from. So we'll kind of walk through a couple of examples. So let's start at the top. So to understand this completely, if the organization is an original donee, you're basically going to complete everything except for Part 2 because you're the original. There are no previous donees. And then it does not specify whether or not you need to complete Part 4, the certification, because that's dependent on certain information you put into Part 3. So if you are a successor donee, then you need to complete Parts 1, 2, and 3, and you may need to complete Part 4 if required. But everyone will complete the identifying information field. So we'll start with the name of the charitable organization. That's the donee. Their employer identification number, and their address. So in this case, Acme Charities is reporting this donee information return, and we're going to get the information on who the original donor was. So in this case, it was John Doe. His identifying number and his address are clearly stated on the form. This should match up to the IRS records from John Doe's previous return. So that's going to be processed and kind of evaluated by the IRS to match up, to make sure that these records are similar, and to make sure that there's no fraudulent intent. So in this case, there was a successor donee. So Acme Charities is disposing of this property by transferring it to Charities RS, and Charities RS, their employer identification number and their address are listed right here in Part 1. So there aren't, in this situation, Acme Charities is the original donee, but if we had an original donee that was not the same charity that's in the identifying information field, then that original donee would be listed here. So it's either going to be in the identifying information field or down here, but the original donee's information is going to be the donee's information that appears on IRS Form 8283 that John Doe filed. And again, we're only going back up to 3 years. This does not apply to any transfers of property more than 3 years removed from the original donation. So if for some reason Acme was filing this and they received this not from the original donee but from a subsequent donee, then you would list the original here and then the donee that immediately preceded you in lines 4A, 4B, 4C, and 4D. So all of these information fields are exactly the same. They're going to contain the name, the employer ID number, and the address. So Part 3 contains information on donated property. In this case, we're reporting the disposition of one asset, but there are 4 different fields. So if this is for individual vehicles, such as an airplane or a car or a boat, this probably was previously reported on IRS Form 1098-C, which is the contributions, the acknowledgement of contributions of vehicles, airplanes, and boats. So in this case, you would enter a pretty accurate description of the donated property. If it's a vehicle, you would include the vehicle identification number, the VIN. If it is a aircraft, you would include the airplane ID number. If it's a boat, there's a hull identification number. So you should also explain how this was used. So in Part 1, we're going to describe the property. Part 2, this disposition, did it involve the entire interest in this property? So if you had donated land, for example, and you had it subdivided into segments and you parceled out some of it but not all of it, then you would say no. But in this case, we're transferring the entire Toyota Camry to another organization. So we did uh, completely dispose of the entire interest in this property. Now, the question 3 is the question that determines whether or not you need to provide a certification in Part 4 below. So, in this case, we decided that this use was related to the organization's exempt purpose or function. So, they had a car. They used that car to deliver clothing and supplies to needy families. That's within the purpose or the function of that tax exempt organization. So in this case, we would complete Part 4 that certifies everything we stated up here under penalties of perjury and Internal Revenue Code Section 6720B, which happens to address fraudulent statements of dispositions of property for charitable contributions. So there is a lot of charitable contribution related fraud that the IRS is on the lookout for. And this basically says if you misrepresent property that was used as a charitable deduction, under extreme circumstances, you can be subject to a fine of up to $10,000. So you're making a certification subject to that penalty. So be on the watch for that. This specifically applies to taxpayers that might set up a foundation, and the IRS is always trying to be cognizant about fraud that happens when you donate something to a foundation you set up for yourself, but not really. Wink, wink. You're still kind of using it. You didn't really give it to a charitable cause. You just kind of created a tax shelter for something you were going to use anyway. And then if you answered no to this wasn't related to the exempt purpose or function, then you have to describe what you would have done or why it became impossible to implement this, this purpose. For example, if you're a church and you received a donated car, that's great, but you've already got plenty of cars, so you decided to sell it. Well, you can write that, this, we did intend to use it, but when we, went to use it, either it was inoperable or we sold it for scrap or, whatever the reason is, that it didn't fit in your charter. So you can use that to explain why you didn't. And again, if this is tangible personal property, then you would have to write a certification. So that begs the question, what's tangible personal property? It's basically anything that is not cash, and it's not real estate, and it's not considered intellectual property. So, things like patents or trademarks aren't tangible personal property. Ownership stakes, none of those things are really tangible personal property. This is intended for things like cars and other vehicles, furniture, medical supplies, things of that nature. So anything that's an actual tangible item that you would expect a charity to receive, equipment of a particular nature, vehicles, things like that. So all of those things, and it's a pretty broad umbrella. So basically everything except for cash or monetary donations, land or real estate, or anything that you can't really put your hands on. So in lines 5 through 8, now we're going to talk about the dates of disposal and how much we received. So in line 5, you're going to annotate the date that you received the donated property. And in this case, since you're the donee, it's the exact same date as the date in line 6, which is the date that the original donee received the property. In line 7, we're going to annotate the date that the property was sold or exchanged. So in this case, we sold it because we received $5,000 for it. So again, if you receive a copy of this, because you're supposed to, from the Donee organization, if you donated to the Red Cross and then they transfer this to someone else, then you'll receive a copy of that. And then if that, let's say the Red Cross transferred it to the Salvation Army, and then the Salvation Army transferred it to Goodwill, then you would receive a copy of that one. And you would receive a copy of that one every time it's transferred by a qualified organization until you reach the 3-year mark. After the 3-year mark, then it's not really applicable anymore. So I did try to research, some frequently asked questions about this, and some of the information that I received online was related to why this form is filed in the first place. And I've mentioned it earlier, but basically it's a way for the IRS to kind of cross-reference deductions that taxpayers may be taking and track the status of an asset over the first 3 years after that donation. After the 3-year point, I don't know exactly why it's a 3-year point, but it seems that that's kind of the cutoff period for when that donated property really isn't evaluated. But what the IRS would be looking for would be, a gross misrepresentation of the fair market value of a particular property. So if you donated this car and you said that this was worth $50,000 when you transferred it, and then the IRS receives an update saying, well, the charity, had it for basically 2 years and sold it for $5,000, then you might expect a phone call, right? So, you might expect a phone call when you originally filed IRS Form 8283, but if that slipped through the cracks, then this is going to bring it back up and it's going to flag it as a disparity. So this is really kind of a preventive measure for the IRS. It doesn't really benefit either the donee organization or the donor. It is required. In effect, tax-exempt organizations can be penalized for failure to file, and the penalty is up to $50 per form. And again, a $10,000 penalty may apply to any person who identifies in Part 3 tangible personal property that they sold, exchanged, or otherwise disposed of that had a use related to that function when they knew that that property was not ever intended for such a use. So again, it's a safeguard against abusive tax deductions. And then at the bottom, you sign this certifying it. So this signature has to be from an officer of the organization. And if you have to sign Part 4, the same person can also sign right under that, which is the signature form. Make sure you sign both of those. If Part 4 is required in either case, you definitely need to sign the bottom of the form. So there is additional information on the back of the form. For example, when do you not have to file it? There are 2 situations other than making it past the 3-year mark. If the items were deemed to be $500 or less, then the original donor would have marked that on the original Form 8283. And then also, if for some reason, let's just say you received $10,000 worth of medical supplies and you distributed them all as a tax-exempt organization, you don't need to report this if those items were consumed or distributed. Like the exact specific example is medical supplies that were either consumed or distributed by a tax-exempt relief organization to help disaster victims. So this is really intended for big ticket items. Again, things like boats, vehicles, airplanes would definitely be at top of the list. Other pieces of significant equipment, not necessarily consumable items. So I think that's all for this tax form. We've written an article that covers this in depth, which you can find on by hitting the link in the show notes, or you can go to our website. Simply type in teachmepersonalfinance.com, go to the search bar, type in IRS Form 8282, and you'll see the article appear. We'll put links in our show notes to all the forms and to articles and videos we've created about the forms and schedules that we discuss here or in the article. And if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's anything, if you have any questions, please let me know. Hit me up in the comment section. Thank you very much and have a great day.